Welcome to Drill Down Earnings. We have the latest quarterly results from Nokia. Not good. I'm Cory Johnson, the Chief Market Strategist from the Futurum Group. And Nokia, look, really big, important telecommunications equipment company, of course, based in Scandinavia. And the company just had a, not great quarter. Wall Street likes a beat or a miss, and it was a miss, I guess. But let's go a little bit deeper so we can understand the business here. The company did 4.4 billion euro in revenues in the quarter. That's down 18% on a year-over-year basis and flat with last quarter, not what they had hoped for. Now, the biggest reason it was down is they had a big year last year when the company was, in fact, helping to build out the networks in India. The 5G network build out in India, the build out's over, the initial build out, and that really has hurt Nokia's results, which just has not been able to replace that business. They also took a big impairment charge for the sale of their submarine networks business. It was a $500 million or million euro charge, I should say. And so that affected, affected their profitability in a sector, in a part of their business that is going away. But when you looked across all the rest of their business, well, let's look across all the rest of their businesses. So cloud and network services, that was down 16% on a year-over-year business. Their mobile networks, we all love our mobile devices. Mine's right here. Yours is probably near you right now too. Look, that business down 24% in a year-over-year business, as I mentioned. That 5G business in India affecting that. And their network infrastructure business also down in all aspects, fixed networks, IP networks, optical networks, all down double digits and some significantly so. And so as a result, look, this company is in a world of hurt. Telecommunications spending across the world has not been very strong. AI spending has been very good. These guys are focused in telecom, not great. And a stock that was already cheap just got a lot cheaper. On a relative basis, I mentioned I'm not giving investment advice, but the stock is so much cheaper than their competitors, but the business directionally is going in the wrong direction. And for the year, the stock's up only 7%, but down today about 6% after those results are up. But as I mentioned, 7% increase in the year for this single-digit stock. Now, the CEO does this wonderful, I love these video interviews that CEOs did. This one felt super staged. Of course, they're all staged, but David Mulholland, the head of investor relations, asked some canned questions, and the CEO, Pekka Lundmark, the CEO of Nokia, who's been dealt a tough hand, I think reading from the teleprompter, even worse than I read from the teleprompter, which is not good. But here's what he had to say about customer trends, trying to be optimistic, but not to paint too good a picture from an ugly scene. Here is indeed Pekka Lundmark.
Customer spending trends are gradually improving, and I do believe the industry dynamic is showing signs of recovery. But we are not taking anything for granted, and we will continue to prudently manage our cost base as we navigate this challenging environment.
All right, so what's it all mean? I've got one number that tells you a whole lot, the Drill Down Earnings Bite, that will tell you really the number to take away when you want to know what happened in the second quarter, the one number that means a whole lot, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, so Nokia's second quarter earnings are out. They're not great. The essential summary or drill down earnings summary here is that revenues for the company, of course, they report in euro, and the $4.4 billion in revenues were even with last quarter. But the number you want to remember here, the one number that means a whole lot, down negative 18%. That's your number. That's bad because really the India business that was so good last year when they were building out a 5G network in India is so bad this year because they're not. That business is over. Nokia's not over, but a tough quarter for this business. All right, thank you for listening to Drill Down Earnings. Check me out at Cory TV, at Drill Down Pod on both TikTok and Instagram, and at 65 Media on YouTube. You can find all of our earnings reports in depth. Good stuff. I hope you like it. Let us know what you think. Thanks for watching.